So one of the things that I do before I even trade is I try to go and watch, see what's going on in the news as far as what's going on. You can use Forex Factory. I kind of lean away towards that because sometimes it doesn't accurately reflect like some of the red folders and things such as that.
Sure.
But you can use that one. But I like my fxbook.com,
Okay.
and you can go on that and click on home first, and then once you click on home, it can take you to the economic calendar. So let's just say if like we're looking at AU,
Yep.
Australia, and the USD dollar.
Right.
All you want to do is just try to find the dates for it. So we're gonna go back to this week, um, and we're gonna look at last night, which should have been the 29th. So the Aussie dollar, it had some news yesterday, right here. Um, so you always want to kind of pay attention to these. Um, they were red folders, meaning that it's high impacting. So it may change the volatility, but it really doesn't change the direction. Um, and that's what you really just want to pay attention to. You don't want to base your markups on solely on news, because news is just basically to help you to push it to your TPs. It just create volatility. After that news is over, you still have market structure basically. Um, that's what you want to pay attention to. You're trading any USD pairs. You want to look, especially like I said, if it's odd or USD, you just want to find your folders, and just kind of just keep tap on it, see what's going on. USD has some good news this morning. Um, industrial, I'm sorry, not industrial, but personal consumption, and then employment. That's always a key one to look at. And even though it says low, it still affects the market. And then we have some personal spending, which is medium. Kind of want to just pay attention to them. So all of these was good results for the U.S. dollar. So you always just want to pay attention to see what's going on with that. Again, don't necessarily get caught up too much in it as far as it. Um, if you know like President Biden is speaking, or if it says like FOMC, you might just want to stay out of the market that day, because that means it's going to experience a high volume. And it's just probably better to sit on your hands for that day. So now that we did that, so that's the first thing that I do when I come to the market, is I want to see what's going on. So we got that covered. Now, as we jump on the charts, I would tell any person when you're first starting, um, is to do this. Come to your chart before you do your top-down analysis on Trading View, and let me know if I'm going too fast.
So far, so good.
Okay, perfect, perfect. So the first thing that you want to do is you want to come to your chart, and I'll do this over. Right click on Trading View. If you have a mouse, just right click on it. Or if you're using your keyboard, you're just going to right click and turn on your session breaks. And that can be found under chart settings, appearance. Then you want to click on this right here. This is what's going to help you understand how your pair moves. I'm just going to make it a little larger because it might be hard to see. So the 1 hour time frame is very powerful because it lets you know when your pair moves. So we know that if we're trading AU, we know that's going to move during um, the Australian session. Um, a lot of people say that you can't make a lot of money in that session. You can, um, but you just need to know when to get in, basically. So when you start identifying how your pair moves, you're going to see that this pair typically starts to move around 7 to 8 in the evening. and that's a good time. You always want to come, I would say, to the market about an hour before you want to trade. So that way you can kind of see where it's at and you can know when to get in. Um, One of the things for me, when I'm taking a look at that, it starts to move. And I think that'll be 10. The hours between 7 to 10 is a good time to play with AU. Um, some people call it the Australia session, Tokyo session, whichever one you want to call it. But it's a good time to start to go ahead and mark up your chart. And when you really start looking at it, you see that after you get your basically your markup in, it takes off around about 10 p.m. If you're working in the evening, I mean, if you're not working in the evening, this is a good pair to trade. So we see that it moves around 10 p.m. That's 11 p.m. So this pair moves during the Tokyo session or Australian session, um, Asian session rather, and then it moves during New York. So you got this window of time right here from about 10 p.m. to about, let's see, to about 12 noon. And so when you really start looking at, let's count the pips, right? Well, from 10 p.m. to 1 a.m., it gave you 33 pips. You could have been done for that. That's your trade for the day. I'm anywhere for me, 20 to 40 pips, and I'm okay. That's enough to make. Once you start increasing your lot sizes and your account starts to grow, 20 to 40 pips of the day is enough to make some serious income with this as you grow in the business, right? But let's say if you wanted to, hold a trade until, let's say, noon. Well, that's 63 pips, right? About 64 pips. Um, and this is one of the slowest moving pairs. Actually, let me go back because it might be 70. Hold on. About 65, right? Because it stopped. It basically, I would have been done. Because this is typically about the time where you want to kind of get out of the market. Because like the kill zone, this is when all the banks, um, they're on lunch. All the major players, they're on lunch during this time. So this is a good time just to go ahead and exit out the market, basically for the day. But if you would have held it, you would have had 65 pips, and that's, like I said, that's more than enough. Some people like the larger move. This pair doesn't move technically a lot, but you can grab 20 to 40 pips out of it. So those are the first two things I'm looking to do. When I'm first looking at the market, I want to check my news, and then I want to see how my pair moves. And it's just great when you can do that because that way you know when to come to the market. That way you're not looking. And I personally, after I set my trade, Anthony, I try not to look at it because I just want to trust my analysis. And the thing about this is not supposed to be a job, right? So I'm gonna set my trade, and then I'm gonna go enjoy what else that I need to do for the day. If some odd reason my analysis isn't right, then I'll come back to the chart and see why it wasn't right. Because no one wins 100% of the trades. One of the things that you can do, if if you just want to keep a eye on it, you can set an alert when you may be, let's say, 15 pips, or maybe if you're like 10 pips and draw down. If especially when you begin, and when you may not feel as comfortable, you can set an alert. Right click, set alert, and boom, you can edit the alert and put, okay, 15 pips. I'm just using this for example. 15 pips and draw down, and you can reevaluate it that way instead of you having to constantly monitor your chart. That everything making sense so far?
Yeah, and since this is a slow pair,
Yeah.
you're not likely to blow past that 15 pip level very quickly, right?
Exactly. And that's what I love about this pair, right? Even if your entry is not the best, right? And you get in some drawdown, it's not gonna kill you. You can still win the trade because as long as you kind of got your market structure right, every entry is not going to be perfect, right? And if it comes back to entry, that means you technically can still get back in the trade, basically. But it's not going to kill your account. It's a slow moving pair. As long as you're using proper risk management, you're okay. You're okay. So that's what I try to tell any new person. Take your time, first of all. Don't try to trade the big moving pairs like the pound. The pound is for, like, a lot of people like the pound because it moves fast, but it will blow your account because it moves so fast. And so you kind of want to just start off with something slow moving, steady, and 20 to 40 pips. Like I said, you can get this out of AU all day long.
So
Seriously.
it's interesting listening to you say this because everything that I was told to do, I was told to do with EU,
Mm-hmm. Mm-hmm.
obviously one of the faster moving pairs.
Yep.
So it's just it's just
Yeah.
taking me a moment to just, I mean, I shouldn't even say taking me a moment to wrap my head. It's amazing me, and it makes perfect sense what you're saying, and
Mm-hmm.
it's totally contradictory to what I was told previously.
Yeah. Yeah. And the reason why I say that is you're a beginner. I mean,
Right.
I consider myself a beginner, right? I
Mm-hmm.
don't want to jump in a pair that moves so fast because if you start losing, because trading is mental, right? Trading
Right.
is so mental, right? The only
Yep.
physical activity that we're doing is pressing the button on our computer to buy or sell, right? The
Right.
rest of it is mental. And if you start trading a high volatile pair and you start getting your butt whooped, you're
Yep.
gonna lose confidence,
Yep.
right? You're gonna lose confidence. And not only you losing confidence, you're losing money.
Yes, sir. Yes, sir.
So you don't now this is me. Now this is anybody that I talk to, anybody that's on my team, I tell them this is just take your time with it. Take baby steps. Like, why all of a sudden do you want to make $1 million in 6 months? You've never made $1 million
Yeah.
in 6 months. So why all of a sudden do you want to make $1 million in 6 months?
Yeah.
Take your time, compound your account, get 20 to 30 pips a day, and the compound effect of you doing that every day, that's gonna get you to your income goals, wherever it is. If it's $200 a week, that's $800 a month. You know, it's just taking the baby steps, having a plan, following the plan, and executing. And this is when this thing becomes real good, you know. But yeah, first starting out, take it slow. And I feel like this is one. It's funny because I really didn't like AU at first. I don't know why I didn't.
Hmm.
I was trading all other pairs, and I was like, let me slow down with this thing because I was going too fast. I was going too fast for my premature skill set. Right?
Hmm.
I'm trying to trade GJ, GU. Those pairs move too fast for my skill set right now. My skill set isn't there yet to trade those pairs. Um, so you need to take a step back, reevaluate, and say, okay, how can I, if I say I want to make money in this thing, what's going to give me, a beginner, the best opportunity to make money with this? And then I begin to feel confident. And for me, it was AU, and I heard several other people suggest to trade AU if you're a beginner. Because it does work for me. I know for me it works on my schedule because sometimes I work I'm not sometimes, but I work 10 a.m. to 9 p.m. And when I'm off, you know, when I get off at 9 p.m., I can go ahead and get in the market and see what's going on. And then when I'm off on my 4 days, I can trade it during New York session and Asian session. So it does not matter. So that's why I love this pair. And so we got that covered.
Got
So
I got two questions for
oh, go
you.
ahead, go ahead, go ahead, go ahead.
Just to recap,
Uh-huh.
and eventually I hope to get, well, let let me clean that up. I was
Yes.
going to say eventually I hope to get to the point where I can trade in the evening on my phone while I'm still working. But
Mm-hmm.
ideally, um, if I get good enough, I'm not going to be working in the evening. But
Exactly.
but having said that, this this is a pair. I believe that you said this is a pair that I can trade during the day session as well.
Yep. Yep. New
From
York session. Yep.
from the New York session. So from
Mm-hmm.
9 to 12.
Yep. I'd say 9 to 12, you can get a good entry.
Okay.
I'm not big. Sometimes I do. If I see an opportunity, I'll hold the trade. And the only thing I don't like about holding the trade is that you get a swap fee from your broker, right? So, but if I see a good opportunity and I'm able to get in, and I say, okay, it's going to drop during Asian session. I'll hold the trade if it's after the kill zone, like if it's at 1 or 2 o'clock. Typically, I want to be done by then, but like I said, if I see an opportunity, I'll hop in and um and get into the market. So yes, this is a pair that moves during New York. So you got Asian or New York that this pair will give you 20 pips easily, easily. There, there's no ifs and buts about it. You can get 20 pips consistently with AU. And the thing I love about it again, it doesn't move fast. So it's perfect. It's perfect for a beginner.
Got
Um,
it.
go ahead.
I'm good. Thank you.
You good? Okay. All
Yes,
right.
sir.
All right. So we covered that. Now let's get into the most important part is doing your top down analysis, right?
Okay.
So I like to start with the daily.
Okay.
And the first thing you just want to take a look at and see what the pair is doing. It is on an uptrend, right? But AU is about to fall. You could just see it. That's like a head. It's like a bullish inverted. I'm sorry, not a bullish, but a bearish head and shoulders forming. Um,
You know, there is kind of a W.
yep. Mm-hmm. Got that. You can see how it formed like a shoulder right here.
Right.
Yeah. Let me. And I don't want to get too technical with it, but just let me know if it is. So you see that. Let me flip that around. Boom. This would be basically the left shoulder. This would be the head. And this would be, I would consider, you could say it right here could be the right shoulder. I'm gonna say this is the right shoulder as well. And it's gonna drop. And so that's what I see. I see a pattern already forming. And it's just a matter of time when it happens. But in the meantime, we kind of getting the overall big picture of what this pair is about to do, right? So let's do this. I'm gonna take the trend line off. So one of the things when I'm doing a top-down analysis, and let me know if I'm going too fast, is that if I'm on trading view, I want to switch from my candlestick to the line. The line chart is perfect with helping you understand support and resistance and support, or support and resistance rather, right? So what I want to do is I want to take a look at on the daily where price has hit at for resistance, the closest resistance, right? So when I do that, it's this on April the 26th, right? So I'm gonna get my horizontal line, right? And I am going to begin to mark this chart up. This is resistance, right? How do we know it's resisted? Well, it touches 3 times. One, two, right? Three. Three touches. Even if it's from dates in the past, it still touches 3 times, right? So that would be my resistance.
So you ignore that high.
Mm-hmm.
Okay.
Yeah. Because this high for me, it is back from February the 24th, right? So I want to get the most recent resistance.
So you go from right to left.
Mm-hmm.
Okay.
Mm-hmm. Right to left.
Okay.
1, 2, 3. Now, here's what I'll do, right?
Yes, sir.
If let's do this. I'm not anointing it completely. Give me 1 second. So here's what I will do, right? If I'm gonna come back to this, but I'm just gonna go ahead and mark it. All right. So now we have our resistance. Now we're looking for the most recent support. Now, I'll be honest with you, when I first started, I would have marked this as resistance. As I've gotten a little better with it, it is now the most recent for me. Because you're looking to do the most recent trade, basically. You're looking to do the closest or most accurate trade that's affecting you right now. Where is price at right now? Now for my support on the daily, I am looking at, I wouldn't use this as support. I would go down and actually use right here for my support.
Okay.
Let me do that. 1, 2, and 3.
Okay.
Price touches this 3 times. Now, so we got the daily. Is that everything making sense? Just want to make sure.
Yeah. So you're not. So you've just identified major support. So you don't go within here and try to find minor support.
Not yet. So
okay.
Here's what I'm gonna do. I'm gonna switch to the 4-hour now,
okay.
and we'll see how all of this starts to confluence and come together. Right.
Okay.
Now I'm on the 4-hour timeline.
Okay.
So right now, when I do 4-hour timeline, that's if I'm trading on the 4-hour timeline, this is going to be my resistance right here. 1 and 2 and then 3. I'm counting that because once I turn on the candlesticks,
right,
it's going to touch it.
It'll probably wick into that area.
Mm-hmm.
Okay.
Yep. Let me switch the color to this. Have everybody confused. All right, so we got that. So we got our 4-hour resistance. Now,
and again, just one resistance and one support.
Mm-hmm.
Okay.
Yep. Now for the 4-hour. Let's see. So for 4-hour, I am going to put my support right here. 1, 2, 3. Now, when we go to the hour.
Do you mind if I ask why you didn't? Do you mind if I ask why you didn't identify support further down, closer to the support or at the daily level?
For me.
Okay.
I'm going by. Now, this is what I've been taught as well. And like I said in past, I would have put my support down here.
Right.
But for right now, because if I'm looking to actively take the trade, I'm looking for the most recent support. The most recent support. Most recent support is April the 22nd. So for me, because I'm an intraday trader.
Okay.
Now, maybe if my thought process was a swing trader, I would look for more something because this will be older and you're looking to hold your trade longer. But for me, it's the most recent price because I'm an intraday trader.
Sense.
Yep.
I got you.
So it's different. Nobody's wrong.
Right.
For different styles, there's different support and resistance.
Okay.
If that makes sense. But because I'm looking to get in and out of the market, I'm gonna put this as my most recent support, and that's on the 4-hour timeline. And so we got 4-hour. Let's go. Does that make sense? I just want to make sure.
Absolutely.
Okay.
Thank you.
Uh-huh.
I do have a question, and if I'm getting ahead of myself, please tell me to shut up. But I've been wondering for a few minutes what these dashed lines are. Yeah, these 3 gold or orange
right here.
Yes, sir.
So these are my alerts.
Oh, okay. There you go.
These are I'm currently in the, well, I was in a trade last night and it hit 20 pips.
Okay.
So gotcha. I have my alerts. So because I'll be honest with you, and this is probably getting a little ahead, but it's okay. Me, I've had times where I was up 50 to 60 pips, and because I was so new, I thought the market would keep going in my favor, and I had a problem with greed, right? I'm just being honest, right? So I would be up 60 to pips, would never put my trades into break even, right? Because I was new and I didn't know any better. And I just thought the market was going to give me 100 pips. Right. So what I'm telling you is from like trial and error. Yes, so now I have my alerts. So I fixed that, right? Gotcha. And you know, in my language, this is how I would talk to myself. Like, yeah, I said 20 pips, take profit, fam. You know, it's just to keep my subconscious mind like, look, you got your 20, get up out of there, right? So that's, for me, this is how I have to talk to myself when I'm trading. Okay. But yeah, that's why I got the lines and the alert.
Thank you.
Yeah, absolutely. I had to figure out what works for me.
Okay.
So on the 1 hour, right, this would be the most recent, and it's very close, which is okay. This is the most recent resistance. We got multiple touches. Right here. That you can see that little one right there, and then right here. Purple, boom. Now for my support, I'm actually going to do this, right? This air, it's touch of support, so it's going to break through. It's just a matter. I got it going down right. I got it actually going down right here, at least for today. I think it's going to make that today. But if we take a look, boom, and this is nothing more than an M formation. When you really take a look, it's a double top. It's an M formation right there. So we got multiple touches right here, right here, right here. And you can see that this is a key area right here. This is where it came right here, broke back down, came down, and then broke through. So right, price kind of likes this area right here. So I am anticipating that you see it? There it go right there. See, it's starting to break through right now. You know, it wants to break this level. So this would be the support area. When it breaks through, then it will become resistance. So we identify top-down analysis, and let me know if that makes sense.
Perfect sense.
Okay, perfect. So now we're gonna turn on the candlestick, right? Now, if you really look at it, now there's like some zones in here, big time. I don't get into it. I am gonna get into it with you with that, but if you take a look at it, these levels right here are nothing more than zones. You see our price, if we really take a look at it, especially from right here, pops up, comes back down, and now it's looking to break through. So from here, top-down analysis, what doesn't make sense? Okay. Also, a key major confluence is the 50 EMA, right? One of the things I like to use, if price is below the 50, I'm looking to sell. If price is above the 50, I'm looking to buy. However, this is when we talked about yesterday, when you put everything together, is you need to look at the candlesticks patterns too, to see what exactly is going on. So this is where top-down analysis comes in to play. And this is all you're doing every day. As long as you're trading, you're going to do top-down analysis and find your support and resistance. And I want to make sure that makes good sense.
It does. And I'm looking at this huge bearish candle. I can't tell the time.
Right here?
No, off back to the left.
Where? Right here.
The engulfing. Keep going left.
Right here.
Yes, sir.
Yep.
Now, so price is way above the 50, but you got this. So, you know, if you only used the 50 EMA as your guide, you would have gotten clobbered on that candle.
Yep. So if you're looking to do that, that's why I say it's very important with the candlesticks. To pay attention what's going on. So my mindset would have been, if price is above the 50, it is above the 50 right here. But when you got your support and resistance drawn up, like right here, you would have known that it's time to get out of the market. It's time to get out of the market, right? Right here, I'm done. I don't even want this. To me, this is a trap to make you think that it's going higher. But when you got your support and resistance, or when you got your resistance marked up, you know that it's time, okay, to get out. Because look, even if you got this, you caught some of this, right? And let's just say if you took that, that's 45 pips. Right. Now for me, I'm asking anybody that's on my team, like, why you still holding this trade? You know it's at resistance. You know you 45 pips in. Like, why you still holding on to it? That's where that greed comes in, right? That greed will kill you in this game. And the reason why I know is because I've experienced it, right? See, I would have still, like, you know, month 1, month 2, month 3 in, I would still held this trade trying to get 100 pips, right? But if you made an error, let's just say if you made an error, right, and you still held the trade. Now, once you've seen this bearish engulfing candle, you got to get out, right? You got to get out, because it's a reversal pattern. It's letting you know that the market is getting ready to reverse, and you just got to get out. Now you can switch. I mean, if you want to switch your bias, perfect. You know, switch your bias then, because you can buy and sell, right? So if you're one of those, like, if I would have took this trade, I would have been done for the day, like, to be honest with you. But if you want your 100 pips, okay, switch your bias and go from being a bull to a bear, and write it down. And then you got your, because you know it's at resistance, then you got your 100 pips. 58 actually. Yeah. That's how I would put it. If you want the big moves, then you're gonna have to switch your bias in regards to that. And there's nothing wrong with that, because your goal is ultimately to catch pips and to turn that into income. So it's okay if you wrote it up here and then you switch your bias. You saw this bearish engulfing, because it's a reversal candlestick pattern. It engulfs this candlestick, right? So that would have been my first key to know that, like, okay, the market is looking to reverse on the 1 hour. On the 1 hour, the market is looking to reverse. And I would have been okay with you or anyone taking this trade, because that's as clear as day reversal pattern. Like you know that the market is reversing, and would have got in on the 15-minute time frame, right? So that's perfect. So you would have seen this. This is a shooting star, and you would have known to get out the market. This is one of the most powerful, especially when you're at resistance, candlestick patterns. So you could have took your trade right here once you got that pattern. I would have waited for it to close, wait for the candle to close. Right? Wait for the candlestick pattern to close. Put your stop about right there because you don't need to have a big stop. This is the perfect trade that you want to do right here. Have about a 10 pip. I would have did about a 10 pip stop loss because you're on the 15-minute. So you want, if you're doing intraday, you want to take your trades on the 15 minutes, right? You want to get your enter on your own. You want to enter in on the 15-minute, right? Now, you could have took it right here, 54.5 pips. Your risk to reward is 5 to 1. You always want to kind of look at your risk to reward when you're trading. That's a 5 to 1.
All that happened in the same day.
In about 2 days. About 2 days. I'm okay with it though. I mean, I'm okay with that. Happened around about what's that? That's about 10. What's about 9:30? It started at 9. It hit that shooting star at 9:30. This is, you know, it's more than an intraday. It's more of a kind of a swing 2 days. But if you know your pair, you're okay with that, and you understand that AU moves like that. So, I mean, that's a good trade, man. That is definitely a good trade, Anthony. But yeah, you want to enter in on the 15-minute. You want to find your entries. If you're an intraday trader, you want to do your entries on 15 minutes. As soon as you saw that candlestick pattern close, right here, I would have got in. But if you were a little unsure, you wait for this engulfing, because technically, you can identify this as a. Let me look at my little cheat sheet down here. You could identify this as a evening star pattern as well, right? Because you have a bullish engulfing, and then you have a shooting star, and then you have a bearish engulfing. So whenever you see these three candlestick patterns at the top, right, you can take the trade because it's letting you know it's an evening star, and it's letting you know that the market is going from bullish to bearish. If you didn't feel comfortable with that, you wanted to see all of this close first, could have took the trade right here, got in right here, and still been okay. That's 50 pips. Nothing wrong with that. You stop right there. 13 pip stop loss. Still over 3 to 1 basically. 50 pips. 2 days. 2 days worth of pips, you know, basically. So, but you see how that makes sense, even if you didn't feel comfortable getting in at, you know, right here after this candle closed right there, right, to have a safer entry and took it right here. Gotcha. And so it's about just understanding those little key concepts, right? Those little key concepts will make you a lot of money. Because look, we can make money as far as it being a bull market, or we can make money as far as it being a bearish market. And either one works for me. Either one works for me. So I did want to ask you, did you have like any questions or anything? Or is all of this making sense? Is it starting to come together a little bit for you?
It's making sense. I just have some issues
Mm-hmm.
And this is more just me strengthening my trading view skills.
Mm-hmm.
Um, but like for instance, the I still haven't figured out how to do the pip counter.
Okay. Now, having the pip counter, I do believe I don't have it actually. I think it's either I think it's a special plugin that you have to use to
Really?
get it. So I'll be honest with you. I always like to be transparent.
Yeah.
That's not something that I'm too sure of. Now I do see people with it, but I have no clue on how they got it. I do know that it's like a special plugin. You
Okay.
mean that what you? I just want to make sure I understand you, where it shows the pair and then the amount of pips that you're getting, right?
No, I might be using the wrong terminology, but when you just highlighted area and show that you could have made X number of pips
Okay.
from here to there,
Oh, okay. Okay. You see this measure tool right here,
the ruler.
the
Okay.
ruler. Yep. Click on that. Find your area where your entry where you got in at, and then draw it down.
Mm.
You see that?
So that's all it is. Huh?
That's all it is, Anthony.
Okay.
That's all it is.
And you holding your mouse down the whole time?
Yeah. Once you once you get your point, hold it down.
Right.
And then just draw it.
Gotcha.
Yep.
Okay.
And that's all it is for that.
Thank you.
It's almost like, like just playing around with it. I played around with it a lot just to get familiar with it. Just took some time, maybe like 30 minutes a day, just kind of figure out what the features were with it. And then once I started to get that, it became a little bit easier. Because I mean, to me, it was like learning a foreign language, to be honest with you. And but just taking time with it and just playing around with it, getting familiar with it, it becomes easy. It becomes a whole lot easier just understanding the nuances of it. But that's all you do. You grab the ruler, just draw it. If it's bearish, you're gonna get it going down, and that's all. Yep. That's all we're doing. And whenever you want to get ready to scale in and get in your entry, you're gonna click over here. You're gonna do short position if you're looking to do a sell, and you're gonna do long position if you're looking to do a buy. And all you do again is find where it is that you're looking to get in at, and then you just have this is why when you got your top down analysis, this is gonna let you know where it's time to get out at, and you just put it right there, and you're good to go. So for AU, if I'm trading AU, just a little mental note, I like to have anywhere from a 25 to 30 pip stop loss. That's typically a good enough measure to be comfortable and have your trade breathing. Now, different situations different for right here. I wouldn't need to have a 25 pip stop loss, is because this is a candlestick pattern, and you can just give it just enough breathing room because look, ideally, if you're selling, when you're selling at the top and this is resistance, you don't need to have a 30 pip stop loss. But if you're like somewhere, as you get a little, it just depends on your comfort level. But if you're looking to do like some sales, like from right here, like if you're looking to sell right here, I probably would put my stop loss like right here, just to give my trade enough room to breathe a little bit. So that's totally different situations, but just wanted to let you know if you're looking to trade this pair about a 25, I would say anywhere from 22 to a 30 pip stop loss is ideal in this situation for AU. Gives your trade enough room to breathe.
So with that being said,
Mm-hmm.
If your stop loss is 25 to 30 pips, then your profit target has got to be 3 times that number.
Yeah. For me, if I got a 25 pip stop loss, I'm looking to go super long, or I'm looking to go super short. But Now, I don't want to confuse you. If you're doing 20, if you're doing a 20 pip and dip, right? If you're just looking to get 20 pips in the market, then your stop loss needs to be at least 20 pips so it can be 1-to-1, right? You always want to have at least a 1-to-1 trade. But if just because me, I know how AU kind of moves, I'm okay with having a 25 to 30 pip stop loss, even if it is 1-to-1, because I'm okay with it being 1-to-1, and also I'm okay with um, my profit margin not being super big, because for me, I just want to get my 20 and I'm done. But for somebody just starting, I would recommend, if you're doing the 20 pip and dip, I would recommend, because you may not be as, your skill set might not be as it may be a premature skill set, so you don't want to risk no more than 20 pips, and that's okay. And that's totally okay. So it's almost like playing basketball, right? So you got your well, let's say NBA, right? So NBA, basically everyone's paid to their skill set.
Right.
So you do have professional players that's on the bench or whatever. They make money, but they don't make as much
Sure.
as a starting five, right?
Right.
So you kind of want to fit in to where that skill set is at.
Makes sense.
You want to fit, and as your skill set grows,
Yeah.
you may be a little bit more comfortable risking 25 pips. But for
Like,
right now, if you say, Jonah, look, I don't want to risk 25 to 30 pips, then 20 pips is okay. You just got to make sure when you're taking a trade that you get the best entry as possible. The best entry as possible. And you can do that by really taking a look at your candlestick patterns. Because let's be honest, I'll be honest with you, right? Every entry is not going to be perfect. That's why I like a 25 pip stop loss when I'm trading. Because sometimes the market's going to do what it do. No matter how good your analysis is, no matter how good your technical analysis is, the market's going to do what it do. We don't control the market. So for me, I want that 25 pip stop loss just in case, if I'm aggressive. Now that I've gotten a little better, I am a little bit more aggressive, right? I'm just saying my trading style. So I want that 25 pip stop loss just in case if I jump the gun too fast, because I'm trying to get it. I'm trying to get it. But for a beginner, yes, it's okay for you to have a 20 pip, just a 20 pip stop loss, and call it a day with that. You want to risk 20 pips, or you want to make 20 pips, or you want to make 40 pips. And that way, if you want to make 40 pips, that's a 2-to-1 trade. So that's okay. That's okay. Yep, that is okay. Um, Let me know if, I just want to make sure though, because how I trade is different. I want it to be different than how I'm teaching. So, just because I've learned it my way, I want to make sure that this is making sense as far as instructional purposes too.
Oh, no, it's definitely making sense from an instructional standpoint.
Mm-hmm.
For me, I learn best when I'm hands on.
Yeah.
So the challenge for me is, and it's not a bad challenge, but it's a challenge nonetheless, is to be able to take this and actually turn it into an actual trade.
Mm-hmm.
You know what I mean? So
Mm-hmm.
that's where um, so that's the translation from the visual to
Mm-hmm.
the actual hands-on. Um,
Okay.
and that's not gonna happen instantaneously.
Yeah.
So I've got to put it all together in my head. And a lot of this, like I've heard about top-down analysis before.
Mm-hmm.
Um, the person who instructed me told me to identify major and minor.
Mm-hmm.
That's not something we did here. Not a big deal.
Mm-hmm.
Um, um, I believe that we were using a 200 EMA.
Mm-hmm.
So that would be, um, I guess it would be lower than a 50, because a 50 would be responsive to price, right?
Yep. So if you're doing like a 200 EMA, your style is more of a swinger, and that's okay. Yeah. So if ideally, if you're using like a 200 EMA, you're trading on a 4 hour, which is cool. Like that's cool. So it's really based upon your style.
Yes.
So
you know what? And that's what I haven't defined yet. What is my style?
Yeah, exactly.
How did you figure out that you were intraday?
Let me. You remember that baby pip quiz that I sent you, right?
Baby pip quiz that you sent me. I don't remember.
I sent the link the other day, in regards to that, because I really didn't understand my trading style. I thought I was a scalper,
right,
but I'm really not. I'm an intraday trader. So I took that quiz on babypips.com, and I can resend you the link. But that's when I found that's what really led me. It's a series of questions, right?
Right.
That fits your personality style, and only you know how your personality is, right? It has some. I'm not gonna spoil it too much, but
okay.
It has some questions in regards of how you process things,
sure,
or what would you do in this certain scenario. And when I really thought about it and answer the questions truthfully, because it really relates to your trading style. And once it said that I was an intraday, I was like, yeah, that's what I am. You know, I don't mind holding the trade all day or maybe 1 to 2 days.
Right.
But that's all I'm comfortable with. Anything after that, like, it starts affecting with me, right? It starts affecting me because I want to be in and out of the market. So you know, Anthony, you may be a swinger. We don't know, but if you take that baby pip, go to babypips.com and take that quiz up there, it's gonna let you know your trading style. And I'm not saying it's 110% accurate, but for me, it definitely fit my personality and how I like to trade. So mine came out as an intraday trader, and I was like, if that's what the quiz is saying, by God, that's what I'm gonna roll with.
Okay.
And I haven't looked back since. So I don't look to swing. Like I'll be honest, I tried swinging a trade like about 2 weeks ago, and I just didn't like it. I didn't. I didn't like it at all. Maybe at some point that'll be my trading style as I continue to grow. But that just didn't fit me, and I didn't like it.
So as an intraday trader, I believe you said earlier that you enter on the 15-minute.
Yep. Mm-hmm. I enter in on the 15-minute. All my entries are on the 15-minute.
Gotcha. So if you were a scalper, you'd be entering on a lower time frame.
Anywhere from the 5-minute time frame to the 15-minute. But for me, when you enter in on those 5 to 10 minutes, you really got to know what you're doing because it's a lot of noise. It's a lot of noise. So I found for me that the 15-minute is great as far as you being an intraday trader. If you're looking to scalp, 5 to 10 minute time frame. You can use the 15 minutes, but definitely the 5 to 10 minute time frame for scalping purposes. Because really with scalping, you're literally just scalping the market, and you're looking to get at least 10 pips and you're done. And you just keep doing it over and over. I don't really like that style. Some people are very effective with it. That doesn't fit me. You know, it almost feels like, you know, I'm just taking whatever the market gives me. In a sense, you kind of want to do that, but I'm very more strategic, right? I like to have a plan, and I like to mark up my charts. And for me, intraday is where it's at for me. I'm just saying I love it because I can see on the 1 hour time frame how these candlesticks move. And I know every top of the hour, when the hour closes, I know I'm getting a candlestick pattern that's letting me know how my analysis is. So for me, that's kind of what suits me. But I really do believe, Anthony, once you take that baby pips quiz, you will find out what style of trader you are. And then from there, right? So if we do we'll do another session next week sometime, right? We can go off based upon how your style is, and we can customize it to you. And what I'll do is I'll make this hands-on virtually, right? So I'll let you share your screen, and I'll walk you through it, how to do it. It's no issue. I'll show you how to share your screen, and that way I can kind of be right there with you when you're looking at the market.